Good morning and welcome to the Genex Power presentation. I'm Kath McCormack, Head of Natural Resources and Infrastructure Investment Banking at Jarden, and I'm joined this morning by James Harding and Simon Kidston from Genex. Firstly, just want to run through a few quick website and Q&A housekeeping matters. Please take a moment to explore the conference website. Under the Info tab, you will find the conference agenda, presenter biographies and company profiles. Next to that, we have the Q&A tab, and we encourage all participants to ask questions throughout the session, and we'll share those with James and Simon once they are through their presentation. As mentioned, I'm joined this morning by James Harding, CEO, and Simon Kidston, Executive Director at Genex Power. Thanks both for joining us this morning. We are thrilled to have you and look forward to hearing more about the Genex journey. It's been a pretty active year for the company. So I'll hand it over to you guys.
Thank you so much, Catherine, and great to present to the Jarden conference focusing on decarbonisation. What you see in front of you is Genex's flagship project in North Queensland. The business is purely focused on renewable energy generation and energy storage. And what you can see was once a very large gold mine, which is now in the process of being converted to a renewable energy hub. You can see an operating solar farm that's been operating for 3 or 4 years. In the foreground, 2 enormous voids, once gold mining pits. Construction's now underway to repurpose that to a giant water battery, pump storage hydro. And in the hills behind, you can see where we'll be locating a wind farm in a couple of years from now. In terms of our portfolio, we're a diversified renewable company with a focus on energy storage. We've got 2 operating solar farms, we've got a battery project, and we've got our pump storage hydro. The initial focus and the image you saw previously is in North Queensland. In the short term, we're developing a Tesla battery near Rockhampton. We call that our Baldercombe battery project. That's very exciting because it leverages our focus and understanding of the Queensland energy storage market and enables the business to bring forward a step change in revenue in 2023. And finally, in New South Wales, we've got our operating solar farm, the Gemelong Solar Farm. It's now fully operational and will lead to a substantial increase in our revenues in this current financial year. So in summary, 2 operating solar farms, pump hydro in construction, and a significant pipeline of wind assets which we will bring to market over coming years. I won't spend too much time talking about the decarbonisation. I think that's been very well covered by other speakers, but I think what I will mention is what I think is a very strong tailwind which will be in place for this business as the coal fleet which underpins generation at the moment is gradually replaced by intermittent wind and solar generation. Our business's DNA is all about energy storage, how to make intermittent renewable energy firm and reliable for customers. We're technology agnostic in how we do that. We've got battery projects, we've got pump storage hydro, but the focus is on that clean green energy, making it firm and reliable for consumers. And I believe the macro environment will be very conducive for this business over the next 10 years and probably much longer than that as well. In terms of financials, the key attribute of this business is long-term revenue contracts that underpin each of the projects we've developed or in the process of developing. And we've had the confidence now to provide a forecast or revenue guidance all the way to 2055. And I realise that's unusual in financial markets to give such long-dated financial guidance, but we do so because of the very long-term nature of our contracts. So, for example, our pump storage hydro project has a 30-year revenue contract with Energy Australia. That underpins the revenues from that project for the 30 years all the way to 2055 under 3 10-year options. So this revenue guidance here is our 3 funded projects, the 2 operating solar farms and the pump hydro. So just to step through that in some detail, these blue bars represent the contribution in the last 4 years from the Kidston 1 solar farm. There's a 20-year contract with the Queensland government that underpins the revenues from that project. Revenues will step up in this current financial year to some $22 million as we get a full contribution from the Geelong Solar Farm, and of course a step up yet again once the pump hydro comes online in calendar year 24. So in summary, $82.5 million of revenue per annum over the next 30 years. That revenue is 85% contracted and 15% is sold to the spot market. In the same way that we've contracted our revenue, we've also entered into long-term arrangements with providers to provide the operations and maintenance for each of our plants. And in doing so, having those long contracts that escalate at CPI, we're able to give guidance as to what our project level EBITDA margin is for our 3 funded projects. And as you would expect with very, very long life assets, there's actually very, very minimal sustaining CapEx. In terms of the pump hydro, it's negligible until year 15. So that obviously enables a significant portion of cash flows to flow through to shareholders over time.
So thank you, Simon, and good to be here. Very exciting time to be in our business, I would say, and for Genex in particular. Simon has talked a bit about our Kiston Pumped Hydro project. That's our flagship project as a company, and it's absolutely key for the transition that's underway in the energy market. So we were able to bring that to financial close in May this year. So we're 6 months into construction. It's just really exciting. It will be the 3rd largest energy storage device in Australia when it's built. It's the first pumped hydro project to be constructed in 40 years and the first by the private sector. It's a 250 megawatt for 8 full load hours of storage device. So really providing a big impetus and shift of renewable power generation during the day or when there's an excess and pushing it into the peaks where the consumers demand it. Just a couple of features of the Kiston project. It's obviously iconic, we believe, repurposing an old gold mine, but it also, given that we're using existing infrastructure, the 2 mining voids, which are very close together, saves in excavation, saves in tunneling costs. We've got very short waterways up at the site. We also are using the airstrip that was built for the mine, and we've reopened that for FIFO operations. We're using the old mining camp as a construction camp for 500 workers. So we're able to benefit and substantially reduce the capex by using existing infrastructure. It's a very well-regarded project, both at federal and state government level. Obviously, a big job creator in a remote part of Queensland. And it's actually a good example, I believe, of federal and state governments working well together when there's a common goal and all parties can agree that this project has multiple benefits, both for the regional community, but also importantly for that transition to a renewable energy future. Just take the next slide. Thank you. So this just shows a bit of a snapshot of where we're up to 6 months into construction. The photos along the top there, you can see on the top left is the construction camp that's now fully operational for 500 labour staff. On the right, you can see the dewatering activities underway. So we need to move water from the lower reservoir to the upper reservoir to allow us to construct the tail race tunnels. In the middle picture there, you can just see what this will look like schematically once it's constructed. So the lower reservoir is the top dark blue, and the upper reservoir. So the dark blue in the lower pit is what it currently looks like. By the time we've constructed a 20-meter high levee around the circumference, that lighter blue area will comprise that upper reservoir with a 230-meter height differential, providing that power. So along the bottom, you can see it's a 3.5-year build. It'll be fully operational at the end of 2024. And we're now really complete with the stage 1 preparation works. I mentioned the camp, the site offices, the laydown areas, all the aggregate plants are all complete. The access roads in the site are also constructed. And in the next month or so, we're ready to start going underground, which is exciting. So the first blast for the access tunnel will occur around the end of the year. And then we'll be doing the access tunnel and the waterway tunnel excavation, the powerhouse cavern, which will house the the pump turbine equipment 200 meters underground. And in the meantime, of course, detailed design is in full swing by Andritz, the pumped hydro equipment supplier, and that will start the long lead time manufacture and delivery to site in 2023 and installed in 24. I should just mention that it's a very de-risked project. We've been working with the contractors, McConnell Dowell and John Holland, who are working in JV together, 2 tier 1 contractors, well-recognized names, very strong multidiscipline across underground, civils, electrical, mechanical works, and both with strong hydro experience. So it's a full wrap EPC contract, and Andritz Hydro of Austria, who are providing the key technology equipment, are providing that as a subcontractor within the EPC contract package. So it's all wrapped, guaranteed in terms of on-time delivery and in terms of performance requirements. So large-scale storage, as Simon said, we're technology agnostic, and we do believe that the transition requires a portfolio of different technologies that have different attributes and features. But large-scale storage, in essence, does 2 things in this transition. One, as I mentioned, is it absorbs excess renewable energy generation. For example, in Queensland, where there's huge amount of solar during the day, both from rooftop and utility scale solar, absorbs that and can generate it into the evening peaks, for example. The other thing that it does is it provides system strength services to the network. As the transition from coal-fired power increases, coal-fired power plants retire, that stable baseload power obviously comes off the system and is replaced by intermittent wind and solar, which causes volatility, instability in the network in terms of frequency and voltage. So what large-scale storage, be it pumped hydro or batteries in different ways, provide stabilization to this system, especially in areas of the network which have high renewable penetration and which are in sort of weak parts of the grid. We've talked about pumped hydro, and obviously that's we've kicked off in a big way, I think, with a very large machine as our first project, but we're now looking very closely at the potential for batteries. And batteries obviously have different characteristics. First and foremost, they are modular. You can deploy them at sort of any scale. You can put them in the market where they're most required, and they're rapid to deploy as well. So in contrast to the hydro, which is a 3.5-year construction time, you can get a battery up and running in just over 12 months. So that's quite exciting. And one of the things that we also like about batteries is when you deploy the battery, that doesn't mean you're crystallizing the technology at a point in time. You can continue to upgrade the battery through firmware updates to take on new technology and to meet new revenue markets as they come on stream. And we think that's going to be a very key feature going forward. So this slide just shows what we see as that growth requirement as we transition from fossil fuels to the renewable energy fed grid that we'll see in the future. By 2040, we see that over 120 gigawatt hours of storage, so that's sort of 30 gigawatts of storage at an average 4 hours capacity, will be required, which is enormous. The chart on the left shows the existing capacity, just 3 projects in South Australia and 2 in Victoria, and on the right, which is an order of magnitude of 1,000 times smaller scale, just shows there's a huge requirement across all the key states, New South Wales, Queensland and Victoria. So we're very excited to play a part of that. So this is our first foray into the battery market. This is a 50 megawatt 2-hour storage, so 100 megawatt hour battery in central Queensland at a place called Baldercombe. And that picture there shows where the battery will be located, actually inside the fence of Powerlink's main substation at Baldercombe, connecting into the 132 kV bay. So very short connection run, which is obviously favorable from a pricing perspective. And we're utilizing the knowledge and relationship we've developed with Powerlink very strongly over the course of the last few years, developing the pumped hydro project to secure a good arrangement whereby they will host our battery on their land, and obviously they're happy to have it at that location. It's our first in what we expect to be a series of battery projects. We've used the knowledge we've gained in the last 3 years developing the Kidston Hydro of the value of energy storage in the market, and particularly in Queensland. And we've seen that the revenue that you can generate from batteries are a combination of arbitrage gross margin, obviously pumping or charging the battery when prices are low or even negative, and generating when they're high, but also these ancillary services or FCAS services. We've seen a lot of the existing batteries in South Australia, the bulk of the revenue comes from the FCAS and the majority, whereas in Queensland we see it's more of a balance, and in fact our modelling shows that arbitrage is very strong, again because of that very high solar penetration during the day. So we're well progressed. We've selected the battery supplier, Tesla. We signed a supply agreement a few weeks ago. We announced that. We regard them as the leading technology supplier in the market and with the most experience of operating in the system. We are using, as I say, the knowledge from the Kidston project to actually develop a different structure. So whereas Simon mentioned the very strong offtake arrangement we've negotiated with Energy Australia, it's up to 30-year fixed rental payment, and we've secured very strong leverage on that project, over 80% gearing as a result. For this battery project, we're talking about a much smaller investment, and we're looking to structure it with an offtake arrangement which secures a baseline, a fixed baseline of revenue, by which we can get a sort of 50% gearing, but allows us to enjoy some of the upside, which we see as considerable now and potentially increasing in the future. So that offtake arrangement is in final negotiation. This is just a quick slide on the Tesla technology. It'll be the very latest, the Megapack 2.0. You can see a picture of it there. It's so all the battery systems, the inverters, the cooling are all pre-installed inside this box here at the Gigafactory in the US, pre-installed, tested, and then shipped to site as a module. And as I say, it includes the battery modules themselves, or the integrated inverters, and a integrated liquid cooling system to ensure optimal performance. So this slide just talks to the economics, as I say, where we see the benefits for Genex and our shareholders. As I say, much lower capital cost, $55-60 million for the 50 megawatt battery. You can see on the chart there the split of gross arbitrage margin and the FCAS revenue. So the green is arbitrage, the blue line is FCAS. So you can see it in Queensland, it's slightly favouring the arbitrage. Around $10 million average per year over the life, and a little bit front-ended, which is advantageous for us. We've secured a 20-year warranty from Tesla, and they'll be operating the battery and maintaining it under a 20-year agreement. Again, a strong EBITDA of over 75%, underpinned by minimal ongoing sustaining capex requirements. This next slide, just a quick picture of, so this is not modeled. What you saw on the previous slide was the sort of banker's base case model. But what happens, and we've seen it in the market, is there are major disruptive events that occur probably on an increasingly regular basis, so-called contingency events. And when that happens, batteries are uniquely positioned to be able to benefit, to provide service to the market, to fill a gap very quickly, and to gain strong revenues as a result. This just shows what happened earlier this year at a place called Callide, a coal-fired power station that had a fire. They lost all their generation in a second. 3,000 megawatts left the market. That's just up the road from Bouldercombe, where our battery will be located. And these two charts on the right just show what would have happened had we been operating at that time. The green curve in the top chart just shows that the prices spiked to $15,000 per megawatt hour. That's the maximum, or vol. So had we been operating during that one day, we would have made $700,000 in gross margin only during that one day. And the bottom chart shows the disruption that occurred in the electricity market in Queensland over the ensuing month. So the green line, as you can see across the bottom, is the expected gross margin, and those blue spikes are what actually the gross margin capturable would have been. So we would have earned over $3 million again, just arbitrage gross margin in that 1 month alone had we been operational. So you can't model these things, but they do occur, as I say, I think increasingly frequently. And the structure that we've got for Bouldercombe allows us to capture that as upside for Genex. So this is part of our energy storage strategy. We want to be a diversified renewable energy and storage company, as we've said. We really think that we've got some knowledge that we've gained in the market and in deploying these diverse storage technologies, and we see real value to us and an absolute need by the market over the coming 15, 20 years. So we're kicking off, as I say, in a major way with a large 2,000 megawatt hour Kidston pump storage project, adding 100 megawatt hours with the Bouldercombe project, which we hope to get to financial close in the next month or two. And then leveraging the knowledge that we've gained in Queensland, the relationships we've developed with state and federal government entities to roll out more storage projects. And we're looking at a couple of sites in Queensland and in New South Wales for potentially larger battery projects than Bouldercombe. So by 2025, we have a target of 2,500 megawatt hours of storage. And we want to retain that flexible structure so we can access contracted revenues, but also merchant energy, FCAS, and other network services. So just a quick recap. So we have two currently operating solar farms. The Kidston 50 megawatt solar farm is one of the best performing in the country with a 33% capacity factor. That's a great area for renewable resource. And that's under a very strong long-term PPA with the Queensland government. The Gemelong project also operating extremely well in full operation since June this year. That's currently generating into the spot market, which we're not unhappy about because we're gaining pretty good spot revenues both from the energy market and from LGCs, which are currently trading much higher than anticipated. So that gives us a strong 100 megawatts of diversified solar as an operating base. And then just to complete the sort of current pipeline, as Simon mentioned, at Kidston, there is also a very strong wind resource. It's a good area to have a clean energy hub for sure. So we're in the process of proving up the resource. We'll be accessing the new transmission line that PowerLink is building for the pumped hydro and using the spare capacity for 150 plus megawatts of wind. We're working with our partners, J-Power, who have been collaborating closely with Genex on the pumped hydro, but also have strong wind capability. They've earned into the development and will own the project 50% with us. And we're looking to prove up the resource and bring that to the market in 2023, so operational in 2025.
So I guess to summarise, as James mentioned, two operating solar farms provides a good foundation of very reliable, dependable revenue. We see major upside from the pump storage hydro project, significant revenue contribution commencing in 2024. And in the meantime, we see the strong potential for earnings growth from our battery rollout strategy. So the first battery project will be Bouldercombe. It's in a fantastic part of the grid. We've got good partners and we're very close to finalising the project finance arrangements, which will be the trigger for financial close to enable that project to be in construction early next year with revenue in 2023. The wind project, of course, utilises the spare capacity on that brand new transmission line, which is being developed to service the pump hydro. And just finally, of course, one thing we're very proud about is our commitment to not just the people and the communities that surround us, but also the environment. And we measure our performance in terms of environmental contribution by CO2 abatement. And this portfolio, I guess, is equivalent to and abates some 2 million tonnes of CO2 that would otherwise be emitted if that energy was generated by fossil sources. So that's a huge contribution. We believe it's equivalent to 350,000 households or almost 1 million people. So we're very proud of that. And the other thing which we're very proud about is our Indigenous engagement strategy. And in particular, we've got a program whereby we're sponsoring a number of the local Indigenous people as apprentices. And we believe, we hope at least anyway, that will make a significant change to their lives and their immediate family and network. So with that, Catherine, I'm happy to sort of hand over, and I'm sure we can take some questions.
Yeah, great. No, thank you so much for sharing the presentation, and I think the story around Kidston Pumped Hydro, not just because of the project itself, but also the story that you've got around using the existing infrastructure and the recycling, repurposing. What a fantastic way to go back and be able to actually use what was already there and feed into your broader narrative around that reuse and sort of decarbonisation. So congratulations to you. That's such a fantastic story. We've got a question here. You've talked both about sort of the contracted revenue streams as well as sort of the upside that you might potentially be able to get in the context of the battery project. And further to that, the question is, how much merchant battery pumped hydro trading gain will Genex retain, and does it have dispatch and or trading control?
Yeah, look, I'll take that one. Thank you. So obviously with the pumped hydro, as I mentioned earlier, it's a huge project. It's an $800 million investment. We really needed to sort of push the gearing to the maximum, I suppose, in order to be able to sort of fund the project. And it was unique. It was a first of a kind really at the time we started developing it. So we therefore ended with a very strong offtake structure with Energy Australia, whereby we hand over the rights to EA to run the plant on the market as they wish. They have full P&L responsibility, so they take the decisions when they want to pump, and they want to generate, how they operate the machine, and they pay the cost, they keep the revenues. So it's a sort of infrastructure type play in that case for those reasons. However, we've learned a lot. Even though we've handed it over and we just get paid a fixed rental, we did a lot of modelling with our consultants. We've got quite a lot of insight from discussions with EA into what the values are, and that's why we're applying that and a different structure to the Balticum battery, our first battery, and we will look at something probably similar to the first battery, on others, but take the learnings as we go. So, in terms of Balticum, as I say, we're looking at a probably 50% gearing as opposed to the 80% gearing we got for the hydro. We will announce, once we finalise the offtake arrangements, we will announce that to the market, and we think it's a pretty innovative structure which will provide some guidance as to how that works. But suffice to say, we do retain the possibility for considerable upside under that arrangement.
That's great, thank you. And can you share your perspectives on why do you think there has not been private investment in pumped hydro in Australia? Why is it that Kidston is the first project in nearly 40 years that's coming to fruition?
Look, I think it's probably a couple of things. Firstly, it's a product of its time, if you like. The time has come, and in actual fact, I mean, Simon, who's one of the founders of the company, will sort of talk better than me to the fact that I think when the project was conceived, it was all about capturing that gross margin we talked about, but that was more driven at the time by the gas price. It really sets the marginal price for electricity, and we could see, or the founders could see, with all the LNG production in Queensland and elsewhere that was coming on in the sort of early teens of the last decade, that there was going to be that potential. It became very clear that this energy transition was accelerating. It became clear that Kidston was a unique place from a renewable energy resource. So the rationale, I guess, evolved, but still the business case, was just only improved as well. So I guess now is the time to do it. It is equally important to mention that these are very big investments. They're very complex projects, and you do need to get it right. And one of the things about converting an old mine is not just that it's obviously a good story and it's a great repurposing of something to productive use in future, but it also gets around what is otherwise a problem and a barrier for pumped hydro, which is permitting and social license permitting, environmental approvals, because clearly a mine site there's not much more you can do to a mine site. It's not been done already in terms of, and it's actually improving the situation. It's providing a better outcome than existed, from a closed mine. So I think that's probably why it's not easy. There have been a number of other pumped hydro projects that private developers have been looking to push. I would say that Genex, we've learned a lot, and I think we've shown that it can be done. So we have certainly got our eyes very much open on another opportunity in the pumped hydro space in parallel with our battery activity.
Great. And congratulations on the developments with the project this year. Fantastic to see the milestones in the context of construction. What sort of keeps you up at night as you think about bringing the project online? What are sort of the key challenges, and how are you sort of focused on mitigating those?
Yeah, no, that's a good question. Look, as I say, it's a big project. It's multidisciplined, multiple facets to it. But we've really de-risked it to a great extent. We had the EPC contractor group we talked about, Connell Dow, John Holland. We engaged them 3 years ago under an early contractor involvement process. So we've been working together with them, optimizing the design, doing lots and lots of geotechnical study work. Obviously, one of the risks with underground works is the geology underground. But this is a very, very well-known site, and to that extent, it is de-risked. And in fact, the EPC contractor has now taken that risk. I guess, secondly, supply chain. Clearly, with COVID, and we can see bottlenecks occurring in the supply chain. We have a very close eye on how that is looking, and we're in very regular, basically almost daily contact with Andritz on that issue. And I'm pleased to say that key technology package being supplied by Andritz is all controlled by Andritz. It's all very largely at their own works in Austria, India, and China. So and we've been assured by them that since we started having these conversations on a daily basis at the beginning of this year, that they've all been working normally. So we're monitoring that closely, but we think we've got the best structure to get through it. And I would say that COVID, obviously more generally, we did build the Gemelong solar farm, started construction beginning of last year, and we completed it on time and within budget and very successfully this year, right through COVID. So we've got some experience of managing major projects through this pandemic.
Great. And that page that you showed at the end, Simon, just with sort of the portfolio and how it's growing and evolving, I think the natural question then becomes, so we've got wind coming into the portfolio. What do you think might be next? And how do you think about sort of the geographic exposure for the portfolio, particularly with the more recent focus in Queensland?
So yeah, look, I think we've taken huge learnings from developing the pump hydro project in Queensland, and we see an opportunity to leverage those learnings in terms of our focus on battery developments and our rollout strategy for batteries, initially focused in Queensland, but also in New South Wales, where we see enormous opportunities. So, the business going forward will be very focused on renewable energy generation, energy storage, within our core competencies of developing these projects and bringing them online with very strong partners to
That's great. And I think what's been surprising to me is what we've seen more recently in the context of the energy markets. It was really acute in the UK, particularly. It sort of felt like a perfect storm around where oil prices went, the wind wasn't blowing. What sort of the takeaways, if any, that you had in the context of Australia? And in my mind, it sort of strengthens the narrative and should hasten investment in the context of both renewables and firming capacity. But what were sort of your takeaways in that context?
Yeah, well, sorry, I'll jump in, but then you maybe take on, Simon. I think it's right. It's always interesting to see what happens, sort of elsewhere and how that might relate to your situation. But look, we're believers. I'm a strong believer in a portfolio approach. You need a multiple of different technologies. As I say, they all behave differently. The pumped hydro is, the most cost competitive for centralized storage at big scale, and for deep storage, for many hours of storage, 8 hours in our case, or multiple days in the case of Snowy Point 2.0. So you do need that long storage. And then batteries, which you can, as I say, sort of fill in the system with shorter storage, but providing that sort of intermittency bridge. And we're always looking at other technologies as well. There are other technologies that are up and coming. I spent some time looking at the solar thermal industry, which is also a dispatchable, renewable technology. There's compressed air. There's all sorts of other technologies out there, and I think it'll take a combination. And having said that, depending on where we get to in terms of the cost curve on that mix of technology, it may well be that there's a residual need in 2050 for some gas peaking plant in parts of the system, just to make sure that there is full coverage, and that that very, very rare effect, but very extreme, that the lights go out, obviously needs to be avoided. So it may be that there will need to be some residual fossil capacity just for those occasions, and then obviously the net zero would need to be compensated from other parts of the economy.
Well, we are almost out of time. I guess one final question: what are you most excited about as you look forward to 2022, and what's sort of on plan for Genex?
Sorry, Simon, do you want to have a go?
Well, no, look, I think we're very, very focused now on building our first battery project, the Balderton project. So that's going to be a fantastic first battery project for us. Of course, we've got laser-like focus on our pump hydro project. We've got strong partners building that for us, but we work very, very closely with them to make sure the project's in accordance with the development plan and the contracting structure. So it's a very busy time for our team. It's quite a lean team. We've expanded our presence in Brisbane to be on the ground to deliver those Queensland projects. But no, it's very, very much focused on delivering those two projects.
I can tell you what I'm excited about is being able to visit our site in Queensland. I'm based in New South Wales, so
yeah, looking forward to borders opening. I concur. Well, thank you both so much for joining us at the Jarden Decarbonisation Conference. We really appreciate you taking the time to tell us more about Genex Power. For those of you who can stay with us at the conference, up next we have got Michaela Jamieson, who will be hosting a panel on the investor approach to emissions risk, exclusion or engagement, and that will kick off at 10:30. So thank you.
Thanks, Catherine.
Thanks, Catherine. Cheers.